All right, everyone. Welcome to the July 21st, 2026 Payroll Restoration Community Live Q&A. As people are joining, I'm just going to start with a few pre-prepared questions that I I just grabbed the questions in advance. I've got just, some thoughts on them, but while people are joining before anybody asks their actual questions, we'll go ahead and just get started here. If I can remember what I'm doing. There we go. All right. So we've got, here we go. Here is the first question that we're going to discuss because this is coming up a lot more lately, especially since COVID. It is definitely way more of a popular thing to happen to be a digital nomad. And this person in particular is a South Dakota resident. But as of May 2026, they're just using South Dakota for a personal and virtual mailbox. They live full time in their RV as a W-2 employee. And their employer is saying they can't list South Dakota as her place of work, but they need to keep track of which state they're working in and let them know every time they move so that the employer can adjust the withholding. Is this the case? I'm in Montana for the season and will most likely go south for the fall or winter. So I'd only move twice a year, but I'm curious if there's anyone else in the situation and how you or your employer handle the state taxes. Yes, that is absolutely true. Be unless you're traveling in a state that has reciprocity with the state that you use as your permanent address, because payroll always happens where you are working. So, for example, we had an employee that lived in Utah, and every quarter I would travel to Utah to do quarter end with the payroll clerk. And as long as I didn't work in Utah for more than 20 days, I didn't have to register for myself to have Utah taxes withheld. So you really have to know what rules are where you're traveling. And, for example, if we travel to California or when we travel to New York to visit my daughter, I don't even bring a computer because I am not going to work in the state of New York, because you only have to work in New York for 1 minute in order to have to pay non-resident income tax to New York. So I just don't work in New York. And I'm sure when this video gets posted on YouTube, we're going to have a lot of comments about how strict New York is with their rules, because if you can be completely remote and never set foot in New York, but if your employment is considered to be at the oh wow, that word just escaped me, but where it's for the convenience of the employer, that is a rule that New York has in place, that it doesn't matter if you set foot in New York, all of your wages that you earn, if you work for a New York employer, you have to file a non-resident income tax return to either get refunded your New York income taxes or to pay in more New York income taxes, because New York has a lot of really special rules, and it's not always the most fun conversation to have when somebody is working for a New York employer and they're trying to figure out why their W-2 says that all of their wages were taxable in the state of New York, even though all of their taxes are taxable in the state where they live and work. But because they work for a New York employer, there's special rules. Um, let's see. Um, and then on this post, I'm just looking at the conversation that happened in the comments. Um, yes, you need, if you're working in a state for more than a day or two, you need to let the employer know so they can determine based off of how long you're going to be in that state if you have to pay income tax to that state. Um, but if you're just spending a day or two passing through, like I've had, because we traveled a lot in an RV for the last several years. Like I would have, we would pull off the side of the road and I would have a meeting in various rest areas. That most of the time isn't going to constitute, doing work or having an obligation to pay income tax, but you really have to know where you are, because like if you're traveling if you're traveling through a state like New York and you make a mistake and pull off at a New York rest stop to do some work, then you're going to have an income tax liability to the state of New York, whether you're a W-2 or whether you're a business owner. It really doesn't matter. But you, whenever somebody is moving from one state to another, or even traveling from one state to another, you need to make sure that that you've done the research to properly know if you have to pay income tax to different states. So I think I think that's why there's a lot of accounting conferences that happen in states that don't have income tax, because accountants are gonna know, and they're gonna, you know, not maybe perhaps not attend some conferences if they're in a state because they don't want to not work while they're at the conference. Um, all right. Our HR, a payroll processor, received an updated W-4, but this form was missing the employee's social security number. I have always been taught that this makes the form invalid and requested they ask the employee for a new form. They emailed the previously turned in form back to the employee, who added the social security number, but the signature and dates don't reflect the date that this changes were made. Can anyone share documentation or proof that this form should have completely created a new form that I can share with them as a backup to my request? I have found language from IRS topic 753, but nothing outside of this. So, my philosophy on getting updated W-4s is that yes, the social security number has to be there. And we do, whenever we're processing payroll for a client and it's like real time payroll, we require a new W-4 to be submitted to make any change. We've had people get married and they want to change their name. Well, they have to submit a new W-4. I don't get crazy and I don't ask for the marriage license, but the W-4, if you look at it, it says that everything on there is accurate under penalty of perjury. So that's good enough for me. But if they're changing their name, I'll usually get a new I-9, which does require the the either the passport or the items from column A or B and C in order for that to be valid. But if they just want to update their tax withholding or their filing status or whatever, I get a new W-4 and the social security number has to be on there. It needs to be signed and dated, but it doesn't, I, I'm not going to say, okay, here's the W-4. I need the social security number on it before I can accept it. I'm not going to request a whole completely new W-4, whether that's right, wrong, or whatever. That because how so many different payroll softwares are using where the employees do the self onboarding and it's not really a real W-4 that they're filling out. They're clicking a few buttons and they're clicking that they accept it and it's signed. But just whenever somebody is changing their address, their filing status, their withholdings, whatever, we always get a new W-4. But I don't really care what date it was signed because I'm just making the change and I'm not the one that retains the records. So, but I will let the employer know whether it's my client or whoever that's managing whoever my contact is at my client's office. I will let them know that what's wrong with the W-4, but that I'll accept it to make the change because they're not getting emailed to me. It's being sent from the point of contact and it's being sent directly through the portal. Like I don't deal with the employees directly. I only deal with one or two people at the business and we don't do anything by email because I mean almost 100% of our revenue comes from payroll related things in one way, shape, or another. And when when you have more than a certain percentage of your income come from payroll, you start paying a lot more for insurance. You start losing insurance because it becomes very risky because there's a lot of people that scammers and people that just go directly after payroll companies. So we don't do anything by email for at least 6 years now. We have portals that are secure. We request that our clients all turn two-factor authentication on because then they're not getting a password reset link and things are going where it's not going to be secure. Um, but because of that relationship that we have with our clients, we know that when we're getting a new W-4 or we're getting a new direct deposit information, that it's accurate because I can't I can't even tell you how many times, and this hasn't happened to me for a couple of years, but it was never daily, but it was always definitely weekly or sometimes more than once a week. I would get an email from myself informing me of my new direct deposit bank account and to please make that change immediately because I don't want to not get paid. And if it goes to the old bank account, it's going to bounce. And when when you do a lot of things by email, I can definitely see that as being, a scam that somebody could fall for. But when we use portals, we never integrate the email into the portal because to me, that defeats the purpose of using a portal if you're still going to have the email integrated in there. But that is a completely other topic. But if anybody is interested in hearing more things about how you can protect your data or increase your data security, let me know, because we can probably do a whole video on that. How are you all approaching per diem for work travel? What documentation do you have employees provide so it's not a taxable event? I've read the publication, but I want to get a general consensus on how you are approaching it. Thank you. So when my employees would travel for work, if they purchased their own airline ticket, they provided the receipt and submitted a formal request. But for the per diem, I would there is a website. Let me just I'm looking it up on my other screen here. It is US General Services Administration. So you can put in what the fiscal year is, you can select the state, or it gives you for every town what the lodging rate is, what the meals and incidental expense is, and if there's an in season or out of season. Um, but this is what I was looking for. So, like in general, this is what the rates are. But if you pick this, like, say there's a conference in Florida, and let's say it's in Orlando, it pops up and it tells you what the rate is. And because there is a in season or out of season in Orlando from April to December, it's $140 for the lodging, excluding taxes per night. And in January, February, and March, it's $169. And this is the chart that I would go off of. And for the first and last day of travel, it's $60 for meals and incidentals, but it's $80 a night otherwise. Or if you break it down, it's $20 for breakfast, $22 for lunch, $33 for dinner, and $5 a day for incidental expenses. But this chart from the US General Services Administration is what I use to, if we're going to be gone, it's a 3-day conference. We'll be gone for 5 days. And it's in June, it's going to be $140 a night for the hotel if I'm not paying for the hotel. But it's $60 for the first day, $80 for the second, third, and fourth day, and $60 for the last day for the meals and incidental expenses. And if you use this chart, you print this, you save it in your payroll folder, this is the proof that you need for why you paid your employee the per diem. But sometimes people confuse per diem and like reimbursing receipts directly. And I don't reimburse receipts directly because if my employees are traveling, I'm going to give them the most that I can give them and where they don't have to pay tax. But let's say you decided that you're going to be gone for 5 days. You're just going to give your employee $500 for all their meals and incidental expenses. They're going to be getting $40 more than the non-taxable amount on the first day, $20 day 2, 3, and 4, and $40 on the last day. So you're going to have, what is that, $140 of taxable income that you're going to have to gross up for when you put it on when you run it through payroll. Um, so I hope that answers the question for the person that asked that. Oh, theoretically, an employee currently working in California is laid off and are planning to move to Mississippi, and no further work will be provided to the California employer. However, the employee will be kept on payroll with the California employer until the end of the year, but will not be performing any services. Must the wages be reported to Mississippi? Typically, wages are reported to the state where the work is performed. However, this is a separation situation. Please provide Mississippi regulation. Okay, so the employee is never going to be working in Mississippi. So it, if I think when I looked at this question in more detail, that it was severance that the employee was going to be getting paid. So they were going to be getting some severance for several months. The severance was earned in California. So when it's paid out, it is fully reported to California. And when you pay severance, there is a little bit more to know because sometimes severance isn't reported to the unemployment department, but sometimes it is. It really varies by state. And sometimes it not only varies from state to state, but it also varies based off of the level of service, the job duty that was being performed, and sometimes even the reason for the severance. And so in this case, it is going to be reported, the severance is going to be reported to California, is not going to be reported to Mississippi because the employee never worked for that employer in Mississippi. They only worked for that employer in California. And it kind of like royalties, in some ways, severance can be like royalties, where if you've got an actor that lives in Mississippi, but they fly to California to do their acting, they're working in California. But when they get their royalties, because every time a show is played that they've acted in, they get royalties for years and years afterwards. Those royalties will be payroll that's reported to California and not Mississippi. So even to take it one step further, it when it's severance, you have to know the rules of both of the states that they were working in or they moved to. The little bit of research that I've done on severance, it is almost always reported to the state where the income was earned. Again, New York has different rules, but if they're moving out of New York, and if it's possible that they're going to be traveling back to New York ever during the time that the severance is paid, well, either way, New York is going to be paid. But let's say somebody moves from California to New York. New York may need the severance to be reported. It depends on, there's a lot of different things, and New York gets really confusing really fast. So I don't want to like go dig into that too much. But if there was bonuses or commission that was being paid and it wasn't severance, then you would have to look, and very likely the additional amount that would be paid after they moved to Mississippi could be Mississippi wages. The easiest thing to do whenever we have questions on if what the rules are for a particular state is we pick up the phone and call that state and ask them where we can find the guidance that will answer the questions. Some states will just answer the questions, but I'm from Minnesota, and Minnesota Department of Revenue will literally read fact sheets to you or send them to you. They won't help you try to figure out what that fact sheet says be over the phone. So just be prepared that some states require you to put things in writing. All right. Looks like the end.